So amongst Friday's Mullen sell-off carnage, there may actually be a ray of hope via some regulatory intervention.
Say what?
Hi again, everyone. I hope you're all doing well. So I'm just doing a quick follow-up video to what I put out earlier on Mullen Automotive. There was something I kind of actually initially missed, but I've picked up now. So on Friday, when we had the big 22% sell-off, if you look at the way the stock traded after the initial drop at market open, it actually stayed relatively flat for the rest of the session. And there's actually a bit of a reason for this, and it didn't actually occur to me straight away. So when a stock sells off by 10% or more, there's an automatic trigger which prevents short selling in the stock for the rest of the day, or not doesn't stop it, it heavily restricts it, and it's something that's been put in by the SEC. Now that trigger and the effects of it on short sales last for a day. However, in some cases, it can actually, there's restrictions on short selling can actually go beyond that day if the SEC deems it necessary. Now, there is a bit of a case for Mullen possibly qualifying for that, because the company has obviously undertaken a big reverse stock split recently and only just regained NASDAQ compliance. And it's pretty well known that it's the short sellers which are pushing the stock price down quite heavily. Like if you look at the percentage of the float shorted, it's actually over 300%. And obviously part of that is to do with, because you can't short it more than 100%, but part of it is because it's the trading and you have to wait for the trade periods to settle. That's why it's getting so high. So the SEC just needs to basically look at the percentage of the float short and they'll see why the stock's been pushed down. And that might lead them to putting a bit of an extension on these restrictions for short selling in the stock. Now, obviously, this SEC restriction doesn't apply to off-market shorts, which are also quite high, but off-market shorts don't necessarily directly affect the stock price. It's more so the on-market shorting, which is pulling the stock price down. So there might be a bit of relief there come Monday. I don't know how to find out whether or not there's going to be an extension of the SSR on Mullen or not. It's something that I'm not as familiar with, but yeah, it might be something worth noting, and it might actually return a bit more stability to the stock. And because of the restrictions on short sellers, it means that some of them will have to actually look to cash out of their positions.
Send it to the freaking moon, idiot.
I'm not saying this is going to trigger like a short squeeze, but it might actually cause a few of them to actually return positions and actually push the stock back up a little bit. Anyway, so just a couple of thoughts on that. Obviously, there's a lot going on with the business in terms of its operations and speculation about future deals, which I covered way more extensively. I'm not going to really go into it here. So anyway, let me know, what are your thoughts on the SSR? Do you think it's something that might actually extend through till Monday's session and it might be something that gives the stock a bit of support, or do you think it was kind of like a one-day thing and for it to come in again it's going to have to see another major sell-off? I'd love to hear what you guys think, and if you know any more about these SEC triggers. It's not something I've actually looked into that much before. Anyway, share your thoughts in the comments below. Have a great day, and hopefully this will bring some stability to the stock on Monday and the market's trading in your favor. Cheers.